and take them with them, and that's critical. You want it to be portable. You want to be able to take it.
Yeah. Now, are those, well, maybe there's a big variety of what you're saying, but for example, are they handled in a cafeteria plan, a Section 125 type plan? Do employers pay much in the way of premiums for these things?
Well, employers can still pay premiums on long-term care insurance, and they don't have to worry about discrimination. That's one of the policy forms that, without getting too technical, it is one of the policy forms that can be provided and may very well be provided by larger companies where they're attempting to keep an executive force in place.
So it may be going to key executives.
Right,
yeah.
right. And also another thing that's really good about the company-sponsored plans, whether the employer is paying for it or not, is frequently they will let you insure your parent also.
Oh.
Which is a nice feature that they do extend it to parents and to spouses. But in particular, if you do have parents that are older and you are wanting to be able to do something to help alleviate a future expense and also a future physical burden on everybody, is to look into the fact, can I purchase something for my parent?
Okay. Many seniors are members of AARP, so I say members quote end quote because, AARP I guess is a secret society for providing medical and other insurance type benefits, but they're also like a lobbying group on behalf of seniors. Anyway, so they offer a long-term health care plan, and so should these people consider other alternatives, or is AARP like a really terrific?
Well, I did some research on that because I was more curious as to what plan they actually did have. And Genworth is a company that they're working with, but they make absolutely no recommendation to you. AARP will not make the recommendation. What happens is you can go onto their website and start to input information about yourself. And then AARP will come up with, through a Genworth type software on there, what you could qualify for possibly. And then formal paperwork is submitted to Genworth in order to see if you are indeed going to qualify for it. So they make absolutely no recommendation. They will not tell you anything about tax benefits or anything that is critical about how the policy works. They recommend that you find your own person to talk with about that.
So AARP sort of offers this and says, this is available in a sense as a member benefit and so forth, but they don't give a lot of guidance and advice in this area.
No, they don't, and probably when you think about it, it's probably well that they don't. They give you the contact information for Genworth, and because they would need to have experts on staff that would be able to answer all the questions with regard to the different kinds of provisions in the policies. And it's very state regulated. Insurance is very, very state regulated. And in the state of California, in order to be able to provide the product, sell the product to our clients, for the kinds of coverages I want to sell, I have to have 16 hours of continuing education every 2 years to qualify to be able to present the product.
Okay.
And each state's different with that as to how they classify what kind of continuing education you need to have.
So does that relate to that certification that I was talking about before? Or?
Actually, no. The CASEL is the Chartered Advisor for Senior Living, and that is a course that's put out by the American College in Bryn Mawr, Pennsylvania. And their purpose there is to have the student of that go through, understand income tax planning, estate tax issues, and in addition to issues that are very specific to seniors. So it's not a one-day course that you go take to say that you are qualified to be talking about senior issues. It's a 6-part series that we go through, what I would call undergraduate courses to get the CASEL designation.
Okay. Now, you were talking about Genworth. So, is that one of the programs that you offer as well? And
yes.
Then the pricing may be a little different because you get a commission, or?
Actually, I didn't take that all the way through when I went through the website, but I'm not seeing that there's much of a difference in the provisions in it. And I'm thinking that the contracts are not, that AARP isn't getting much of a discount on that, if anything.
Oh, okay.
And the other thing that comes into play with that is the California Partnership for Long-Term Care, which it's probably coming up next as one of your questions.
It's really so what is the California Partnership for Long-Term Care? Maybe you can tell us a little bit about that.
What it is it's primarily a source of education for Californians to find out about long-term care. And also, though, the California Partnership for Long-Term Care is a division of the Department of Health Services and works with the Department of Insurance and insurance companies to create long-term care contracts. And right now, I believe there's 5 companies that are authorized by the partnership to have policies for sale to the public. That would be Genworth, John Hancock, New York Life, CalPERS is involved in it, and then a company called Bankers of Iowa is involved in it.
Okay.
And they do pay to be on the California
Partnership.
Platform. But the California SHIP plan was designed to primarily protect the consumer.
Okay.
The Medicare supplement years where there was so much abuse, where some seniors were having 7 to 10 Medicare supplement policies when only one was going to pay, they wanted to create a way that couldn't happen again. And additionally, what the California Partnership Plan provides is an asset protection mechanism. And this can become extremely important for people that have net worths of $500,000 to $1 million, where they pay $250,000, $300,000 in long-term care expenses. All of that would be protected from any kind of Medi-Cal take back.
Okay.
So that it's a good place to work with. I like working with them because they give us a wealth of information, and I think they're there to be of assistance to the agents that are selling the product, but also they're there for the consumer.
Okay. Well, Peggy, we're about out of time, but I'd like to ask you a question that you can answer maybe very briefly, and it's a little bit almost an unfair question, but what do you do if you can't get this insurance?
Well, you have a family point person. You know, I've had this happen to a couple clients where they could not get the insurance or didn't want to get the insurance. It depends on what the issue is. But it's critical to have somebody in your family know what your issues are. It's also critical that everybody else in your family know who that person is. Please tell your family and your families that you're having a problem, but also your friends. Most long-term care is still done by family members and friends. It's not done by outside sources. If you have a financial advisor, work with that advisor to see if they can help you create some kind of a way to help buffer some of the costs. Also, we work some with the elder law attorneys that are very familiar with Medicare, Medi-Cal rules, and that's a good option to go by.
Okay, we're all out of time. So Peggy, thank you again for being with us today and sharing this really important information. Many people are wrestling with these issues right now. Peggy has a website. It's fwcg.net. And we'll be posting some information here, contact information for you to get in touch with Peggy if you need to, and also for myself. I'm Michael Gray, CPA, and thank you again for joining us for Financial Insider Weekly, and we'll see you next time.